And that sound means we are now live here on our YouTube channel. It's our halftime report, daily show we put together for you guys out there, where we go through the markets one step at a time, looking at the charts, technical analysis, discussing the news, economic data, anything we find important and relevant that's happening across financial markets, analyze it and help you guys better run your daily routine out there. Welcome, welcome, welcome. If you're a veteran of the community, you know what to do right now. Hashtag Team Tackle right in the chat. Let's get the party started and let's get the positivity, the energy, and the conversation going there. And if you're brand new to the channel, first time here, subscribe, click the bell, come back and join us. We go live every day. The markets are live, 12:30 p.m. Eastern time. Let's break these markets down one step at a time here. We got Coach Tyler and Coach Matt and myself here to analyze markets. Matt, you first. How you doing today, sir?
You know, Tim, doing absolutely fantastic. Excited to be here with the crew.
Yeah. Tyler, what about you, my friend? How you doing on Thursday?
You know, my rally cap didn't work yesterday, so I'm like, all right, screw it. I'm taking a shower today, trying a new process. We'll see how it goes.
You thought looking professional was a better answer?
Hey, we'll see. I mean, so far I'm 0 for 2, so I don't know.
I think you bring back the rally cap and we put it on like we got inside out, put it on backwards. We do it the right way.
Listen, if we're down next Wednesday when I come back, that's what's going to happen.
Done. I like it. I'll do it with you.
Yep.
Yeah.
We'll both drive Tim crazy.
No problem with that.
I want Tim to take his hat that he's wearing right now, put it inside out, upside down. I want to see what that looks like.
Get the market to go up 2%. I'll wear your rally cap. Yeah, okay. But no,
Okay.
I don't think there's a correlation. No. All right, let's talk markets here, guys. Obviously,
market can be subjective.
That's true. That is true as well. Markets are kind of pushing down here, pressing support, trying to test it here. We're going to break down action one step at a time. Obviously, you know, different sector performances are standing out here on today's trading. Energy doing really, really well. Communications holding up. But the S&P 500, which is the broad-based index, it controls and contains all of the different sectors, is now testing a close below the 50-day moving average. Even just in the last hour, we've kind of rolled over a little bit on the intraday. Let's start with Tyler first. You got the charts here, Ty. What are you seeing in the chart?
It ain't pretty today, Tim. I was encouraged this morning. We had a nice little bounce off the 50-day, but came right back down. So when you look, it's easier to see this intraday, but you're seeing we're testing the low from last week. Remember last Friday, we had that ugly close, big bounce on Monday. We're back down testing that level. So you go intraday here and you can see this 378.23 and change. You bounced off of it earlier today, actually. Is that there? Yeah, we're Thursday. Yeah. So bounced off of it the first attempt, coming right back down. Look, I mean, it's messy. It's messy, Tim. It's messy. If we had started this discussion 30 minutes ago, I'd have said, hey, it's okay. Don't worry. We're in the green. It's fine. We picked it right back up. I mean, so this type of price action is tricky. It's challenging. I think 378 is a level to watch. You want to stay above that. If you don't, it's very challenging to have any kind of short-term constructive bias, at least on the S&P. At least on the S&P, there are areas of strength, but you don't want to see this close below 378. It gets a little nasty under there.
Matt, what about you? How are you seeing price action here on the market?
Yeah, I mean, I certainly agree with Tyler's technical read there. It did look a lot better 30 minutes ago. There's no doubt about that. The market was in it. It had already bounced off that 138 level. We'd already seen that test. We tested that on the overnight action, but it responded positively there. It's bounced off that 378 level multiple times on the overnight action, and so you're testing those lows here again here today, and it's a little bit concerning that the market tried to recover on the cash open. It tried to break out of 382. It couldn't hold its head above that level early on in the trading day. Now you're doing another dance at support.
Mm-hmm, mm-hmm.
And we all know what it means when support gives. Right. I mean, you got to expect a little bit of more further depreciation of assets.
Yeah, it's a broad-based test of support here,
Yeah.
obviously on the daily and even the intraday charts here. We're pushing down here. I do know there's not a lot of news going on out there in terms of broad market news. Chair Powell is giving some not testimony, but a speech to, I believe, the Wall Street Journal Jobs Club or whatever it is. They're in New York City. Maybe he might say something that could impact markets here intraday, but that's not what's moving the market today. Guys, we're just testing support is really what it is.
And there is some speculation that the Fed may be bringing back some of the 2011, monetary philosophy of Operation Twist. There is some chatter out there today that the Fed may be looking at some type of rebalancing of the long-term versus the short-term yield. Operation Twist certainly could do that. And so if there is some concern on the inverted yield happening, the Fed, by buying long-term yields, selling short-term yields, can fix that. They did in 2011 to some degree of success. So we'll see if Jay Powell hints toward Operation Twist. If he doesn't, I think it's a nothing burger. If he does hit toward Operation Twist, yeah, the market's going to be talking about it.
Mm-hmm. Yeah. And let's take a look here, Ty, as I'm looking across these other indexes. Obviously, we need to get a read on all of them. The Russell kind of testing support as well. The NASDAQ looks the worst out of all four. Dow actually holding up better than the others in relative performance over the last month, but also looking pretty weak here. What are you seeing across the different indexes?
Yeah, so you are seeing small caps get dragged down today. Laggard. Been a while since I've said that with small caps, but following the S&P in the sense that it's testing support here. It's been a while since we've broken a pivot low, so you still got some room to the 50-day. And make no mistake, the long-term trend on this thing still looks glorious. But it ain't a good look. It's not a good look. You look intraday, you can see we keep tapping on this 215. Close below it in the short run is not bullish. It's not bullish. So yeah, it's vulnerable right now. Looking for a breakdown to 215, and then we'll see if it stays above the 50-day. But this is the most weakness that we've seen since November, since this uptrend began. And so there's a reason why you're finding it more challenging over the last 2 weeks to trade if you're a directional trader than, quite frankly, any time over the last 4 months. So there has been a change in character. I think less is more from a directional perspective until this thing gets out of its own way. But yeah, in the short run, Tim, 215 would be support on this one for me.
Mm-hmm. Mm-hmm. And obviously the small caps have had that tremendous run. That's an interesting way you just said that, because over the last 4 months, a lot of trading has felt, pretty much straightforward. Things were working out. We had a beautiful trend. We had the rotation trades coming back, all that kind of stuff. Last little bit of chop obviously makes it a little bit more difficult to play those directional plays, but I still hold to the same statement we've had for a long time. It still is a stock picker's market. If there are great setups, I think you can still approach those great setups, with your rules and all that kind of stuff in that regard. Like, look at what's going on in energy today. We have strength in the market in different pockets. What about the sectors here? Let's talk a little bit about that while we're going into this, because it's not like the entire market is selling. Right. Energy is up big, another 3.5% here on the backs of a pretty good move out of crude oil and some positive sentiment there. Matt, what are you seeing across the sectors that's grabbing your attention?
Well, again, it feels a little bit worse than it really is right now. And anytime the market's going to test support, nobody loves those moments in time, guys. Like, literally, anybody love triple test support bounces in the stock market?
No.
Like, anybody?
Nope.
Like, nobody likes those, right? You like one test of support because it gives you a great buying opportunity. You like the second test of the support because if you miss the first one, you're like, yeah, it gives me a little bit of reprieve and lets me do it again. The third one, you're like, why is this not going up?
Yep.
Right? What is going on to not have my asset class going up? And so nobody likes multiple levels of support, but you're going to still bet on support until support fails. That's number one. Number two, the market feels a little worse because of what's happening in tech. Tech gets so much love in social media. Tech gets so much love in the conversation space. And tech's been up big in the last year, guys. And there's some rollover here. I do believe this is more sector rotation than broad market mechanics here. You're still seeing that the movement that we've been talking about in recent history, but really the theme that we've been detailing since the election play out here, and you're seeing rotation. That's my opinion. I don't think you're seeing the entire stock market roll over and trigger some event to where we're going to be talking about the market down 20%. Maybe that's in the cards, maybe it's not. But I have a hard time seeing that when the cyclical areas of the market are doing so well from a trending and a pattern perspective. When the entire market is rolling over, that's one thing. When you see cyclical areas of the market like finance, basic materials, when you see it in industrials, when you see it in energy, that's hard to say the entire stock market's going to roll over, but the economy and those areas of the marketplace that are really tied to the economy are going to do really, really well. So that is hard for me. That's a hard nut for me to crack there. And so let's take a look at energy for a second here today.
Can I say one thing on tech real quick, man?
Go ahead, Ty.
At today's lows, this is a 10%. It's 9.8. So
it's in correction territory.
Yeah, so this is a 10% correction. And historically, you get these about one time a year on the S&P 500. It's not abnormal, right? It's not abnormal. You get this. And I was looking back here. I mean, this was a 14% drop in the NASDAQ. This one was probably around 10. So it's not like we haven't seen this before post-March, right? I mean, we've seen two other instances where tech had one of these downturns, and look what happened. The trend eventually continued. It's not like we haven't seen this movement before.
Well, and we also haven't even seen Apple or Microsoft even get anywhere close to the 200-day moving average and really seeing major support tests here. So I think it's premature to dance on the grave of good old technology and Amazon and Apple and all of those stocks out there. But when you're looking at the strength of the market here today, obviously that's in energy. Energy has been and continues to be one of the best performing sectors out there with a lot of positive mentality towards energy. And energy had one of those moments here today where there was a potential landmine that could have stopped a lot of this momentum called OPEC and Saudi Arabia. And, they passed that test. Saudi Arabia comes down. They made the announcement that Saudi Arabia is going to agree to continue their 1 million barrel a day cut. That's obviously a bullish catalyst. But it wasn't just that. As oil, if you go to oil very quickly, whenever oil gets into the 60, 65, 70 area, you know what Russia's going to do. They do it every single time. They open up the floodgates and they start liquidating the marketplace. That's Vladimir Putin 101. That's what he does all the time. But at least for a month, OPEC and non-OPEC producing countries have agreed to not increase the supply of oil. And there was some speculation that increase was going to be about 500,000 barrels. They're not going to do that. So a little bit of a double whammy approach here on oil with the positive response out of oil. Energy is going to respond there as well. And I look at the energy sector here today, and if we kind of go back to XLE, this is a breakout here for me today. I think you got to call this a breakout in energy. It violated the previous resistance. You're most likely going to close above that. Obviously, the intraday got caught up in the market selling in the last 45 minutes. But as long as you close above that previous resistance channel, you're going to see that as a breakout. And even though you do got a little bit of a negative momentum happening in technology right now, and specifically discretionary in technology, they are just completely out of favor right now. And you don't want to catch that falling knife, guys. Let it find support, let it hit the floor, and then we can look at discretionary. We can look at great names in discretionary. We can look at great names in technology. These are going to be two areas of the market that are going to be a faster viable candidate than a lot of people think out there, in my opinion. Let the bloodbath happen. Stay away. Don't touch that stove when it's hot, and let the knife fall. Let it happen. Don't be the individual that says, I want to be the tick that ends this bottom here. You don't want to be that dude. You don't want to play that game. Go where the money's going, and the money is flowing into energy. And when you look at some of those energy stocks out there today, look at ConocoPhillips, COP. Isn't that a breakout of 55?
It's a beautiful breakout.
with
Great.
momentum behind in the trend.
Yep.
Okay, look at CVX. Same type of concept.
Yep.
Okay, what about HFC? What about
Yep.
MPC? Okay, high base potential trigger, real good high base potential trigger there. We talked about Valero yesterday, right? Valero getting caught up in a little bit of the pain here today. Remember, Valero's a refinery; it's not drill baby driller, but still pretty decent trend, good momentum behind the trend, and I still like the potential trigger above 80. So in energy here today, really kind of bucking the move in the marketplace. Real good trend, real good pattern, real good stocks setting up for potential breakouts in energy. Take a look at industrial here. Another area of the market that has done really good, An area of the market that we upgraded coming into tackle trading this week, whereas the rest of the market is bloodbath. What do we do with industrials? Setting up really, really nice. Now take a look at some of those individual components. Let's take a look at Caterpillar for a second. Who's not interested in this flag-based pattern off momentum in Caterpillar?
You have to be. I mean, that's the thing, is that you're getting some of these retracements on some of the higher flyers that were beautiful and just taken off. So you have to be interested in patterns like this. Caterpillar is one that grabbed my attention this morning as well, Matt.
Okay, what about, let's take a look at John Deere. And yes, we're still going to say John. Who's not getting interested in that pullback there, right? You just now these two, you're just kind of now waiting for them to confirm more than anything else. What about let's take a look at EMR and JCI. High base potential breakout. What about JCI?
Yeah.
Time,
but strong, right?
Yeah, just really strong. Take a look, and let's take a look at finance very quickly, just in general. And so finance still hovering in a high base type breakout with momentum behind it. Obviously hasn't confirmed like energy here today, but you're not seeing all the headlines, right? I'm a consumer here too, guys. We're all consuming the same headlines, and the headlines make you think the world is ending to a certain extent. They do. But then when you look at the cyclical areas of the market where most of the money has been going into over the course of the last 3 months, there's no concern here, guys. And if there is, it's because somebody's ducking their head in the sand and not looking at what is actually transpiring here. And then the one sector that is just really confusing to me to a certain extent is comms, communications. When you take a look at communications, if there's a sector in the market that should be looking like discretionary and like technology, it's communications. And comms is holding up really, really nicely. Look at news, look at Fox, look at Comcast, look at Viacom. Let's take a look at CMCSA. Potential breakout after the breakout, snapback, retest, Cody special, now threatening that secondary breakout. That is strength in that chart, guys.
Yeah,
that's what that is. What about NWSA? That's turning into a consolidation cup and handle pattern with a potential breakout and a new leg coming. It's not. My point is, it's not broad based. This is sector based. This is sector based. Let's see what the market does with support. Obviously, support tests are going to be very important here. But this to me is not a repeat of an entire market that is getting skittish about something. This is a valuation concern and sector rotation. That's my take on it anyways.
And I love both of your perspectives on this. I appreciate not only the technical read, but the breakdown of the sectors, some individual components there gives it some context. And, Tyler, you're right. You've studied a lot of price behavior in the markets over the years. And I think a lot of beginners, they're not aware that these are normal things. 10% correction happens in the stock market quite often. In fact, I think you said at least once a year on average. Just last year, we had 2 of them. Let the markets perform, let them behave, let them find support or not, but go out there and continue to approach strength in strength and accept if something is weak that you either have to do something about it or ride through it. Tyler, any more comments on stocks or broad markets right now?
No, it gets tougher when the market's below the 50-day moving average.
It does.
So you just have to realize that volatility will increase, overnight gaps will increase, directional trades do become more challenging. And so you can either fight it and force things every day, or you can just take a step back. And it's like when your kid's throwing a tantrum. It's like, just let it play out. He's going to exhaust himself. And then you come back. It's the people who just keep trading when things are tough that get so exhausted. Like if this ends up being a couple of weeks, they get exhausted. And then when the new uptrend emerges, they just don't have it. They just don't have it. And it takes them a while to get back in. And so it's like, just, do no harm, let it play out, and then you'll be in a better spot once this is over.
And Ty, when this type of volatility and the concern does build in the marketplace, is it fairly standard for you to, when you are looking at a directional position, to cut that position size in half? Do you typically go half position?
Yes. So for directional trades, my step one is, if in doubt, stay out. But if I'm like, look, I still want to participate with directional stuff, then yes, the compromise is you play smaller because you're not going to make a killing, but you're not going to get killed. And
even in those areas of the market that are still showing strength, because they can get caught up in the daily news cycle the same way everything else can too. And if they get caught up in the daily news cycle, you get blown out of your stop loss, even in a good trend. So I'm with you. Even in things like take a look at Caterpillar for a second. I think we're all interested in Caterpillar here. Right. But even in something like this, that is a very good trend in an area of the market with favor right now, right? It does. Even there, these areas of the market can get caught up in that one-day news cycle, right? Where it just blows up that stop loss. So because of the news cycle, I still think you're even in things you really like, I think caution, conservative, lowering position sizes until the volatility subsides is wise to do.
Yep. Because you're going to get another uptrend like what we've seen. It happens every time. Every time the uptrend comes back. It's just, how much did you get beat up while the nonsense was here?
Don't get knocked out.
Right. Get out of the corner. Yeah.
Get out of the corner.
Get out of the round. That's right.
Get out of the corner.
Live to fight another day. I agree with that as well. Let's take a peek through.
Keep selling though.
Market is selling. Yeah, market is continuing to sell. One thing that's not really been selling, though, has been this crude oil chart. I got to tell you, let's take a look at commodities and start with crude oil. Matt, you talked about the news a little bit earlier, and obviously positive sentiment around crude, but then also the OPEC news is just being a catalyst here today. We're pushing up near $64 a barrel, with threatening a breakout as well. Matt, how do you read this strength here in crude?
It's obviously the strength in energy and crude today is unmistakable in comparison to what is happening in the market. Crude's up 4%, energy's up 2.5%, and the market is selling and breaking support right now. That's something you don't see every day, guys. A breakout in crude oil with the S&P breaking support. That's just not normal mechanics, to be perfectly honest with you. But you also don't typically have a news day like today where Vladimir Putin actually agrees to not make money. Like that's a little surprising to me. Now, I don't believe one word Vlad says. I believe Vlad's going to open up those pipelines and start liquidating the market anyways. But at least for the headline, they did agree to not do that. And so, again, there was some wide speculation that Russia and some of the non-voting members of OPEC were going to open up those floodgates a little bit and increase the supply to kind of attach to the increasing demand that's been building worldwide about the economy reopening up and, people getting back out to business and traveling and all that, that obviously has a positive impact on energy stocks and crude oil in general. But typically we see Russia do something different, and they didn't today. And so a little bit of a double whammy positive bullish catalyst for crude oil here today. I still think the storyline's energy stocks. I think crude oil is going to stagnate at some point, whether that's 60 to 70 or 65 to 75. We don't know. But I'm pretty certain Putin's going to open up those floodgates here at some point in the near future. I don't think it's going to impact energy stocks very much. So
yeah, Putin's right, by the way, when he does it.
Putin's right.
You got to
He
sell
is.
oil. You make oil. You get a great price. Price went up. Sell it, right?
If I'm Vladimir Putin and I have a product and there's demand for that product and my country needs money, I'm selling that product. I don't give 2 cents what you think I should do.
Yeah. And he will do that at some point.
And by the way, Vladimir Putin doesn't care 2 cents what you think he should do anyways. He's going to sell the oil. He's just going to tell Saudi Arabia he's not going to do it.
Yeah.
And that's good enough for the headlines today.
Yeah, absolutely. And the headlines are driving it there. Tyler, obviously, just a beautiful, candlestick in that regard. I had a little choppy back and forth there for a few days, but now here we are up near the high. Anything you want to add to that from a chart perspective?
No, other than it's got to be depressing if you're like, oh man, I've been waiting for a pullback so I could get in some energy stocks.
I know.
Sorry, man. Tough luck. You chase it or you don't play.
Mm-hmm.
I know everybody's looking at tech today and they're like, oh, what's going on with tech? It's down 10%. This is horrible. And energy's like, we have been getting just hammered for 10 straight years. And technology can do no wrong. Technology's the kid that never does anything wrong. And finally, the other one's like, I finally have my day in the sun, and all you do is talk about technology again. And she's like, I'm not giving you the pullback.
They haven't been here recently.
Nope.
Let's keep flashing through commodities here if we can. Gold down testing support 1700 is now been broken actually now on the intraday here down at 1697. We know these ranges are going to be somewhere in the 1680-ish ballpark down there, but like we've been talking about for 2 weeks, it's an ugly chart until it finds support. We don't know exactly where that support will confirm itself.
You know where it historically is, and that's 1680 by 1675, and you're looking at that ballpark and you're saying, well, if it holds, we'll look at it. If it doesn't, who cares? We'll look at it when it gets to 1500.
Yeah.
Do you think you're a little disappointed if you like gold today? Just, stocks are getting liquidated and gold's got no bid here.
I'm wondering what has to transpire in the world for the bid to happen on gold. Yes, Tyler. I have been wondering that in recent history. How bad does it have to get? Yeah, there have been many times in the last 6 months where I've had moments in my life where I was like, this doesn't make one GD lick of sense. Like, not a lick of sense. But you know what? Price is king, queen, and country. So you follow price.
I just got to mention one comment from the chat here. Maria Diamond, who knows a lot about Vladimir Putin, having lived in Russia for much of her life. She says, what he says is not what he does.
That's what I said. I was like, I hope Maria agrees with me or she's going to cut me. Yes, what Putin says is not what he does. He is a very well-known liar.
Yeah. By the way, as we're looking at the metals market, we don't look at copper every day, but I do want to take a peek at it here today. HG contract, if you can. Obviously, it was such a juggernaut there for a long time. Finally getting a little bit of a retracement here. It's down 3%, breaking below 4, but it's trying to hold that moving average right there. I mean, is this a constructive retracement, Tyler, with the volume picking up and as well on the sell-off and the increase in the candlestick size? How do you read this one here?
I don't want a Monday morning quarterback, but it's easy to say you could have seen this coming to a certain extent, but then it's like, could you? I don't know. Look, it had gone from 350 almost to 450. Percentage-wise, that's ridiculous. Keep in mind that if you never get things like what was this, December, January, where it pauses, I mean, then it's unsustainable. So this had set such an incredible pace that it was bound to have a deeper retracement at some point. Again, this is long-term healthy. It creates a more sustainable trend. Is it ideal to have a higher volume and kind of a failed bounce attempt? No, that's not ideal. It's not surprising given what's going on today. I mean, they're selling risk assets. So ultimately, it's a buying opportunity because the long-term trend is up. I don't think today changes any of the narratives. I just think it's a shaking of the trees. And so if copper is going up because of economic growth, it's going to keep going up. It's just a matter of what's the pace. And so I think it's a dip to buy. I wouldn't buy it today, but ultimately I would not be surprised if this goes higher after this pullback.
Yeah, and I certainly agree with Tyler here. I do think it's a shakeout day, and no, I don't think you should be too concerned about copper. We haven't seen these lower prices since last Wednesday. So no, I don't think we should be that concerned about a trend that has massive momentum behind it. I do think though, however, today probably is a little frustration for people that trade FCX, because you
Sure.
had a really good pattern on FCX, and that was in conjunction with the the momentum based pattern on the 9 with copper, and that got caught up in that here today a little bit. So you're right. I mean, copper's still in a decent pullback, but the failed pivot at the momentum throws a little bit of a wrench into the technical analysis.
It does.
Yeah.
It does. And it's an example where when the volatility is high in the market, when you're seeing more selling, this is why it's more challenging, because your convictions get tested. Yeah, it's tough.
Well, and here's the thing. My conviction isn't tested on FCX, because I actually think FCX at 32.5 is actually a pretty decent little support level to look at. So, but if you were looking at that on the last week on the 20 EM on the 20 SMA, you get your little bounce there. Copper starting to form it. It actually gave you a pretty decent little trigger. Again, you got to be that assassin, and that's hard to do. It is. It's easy to say, and it's very, very difficult to do. But I still like copper here.
Yeah, I think in general, you got to like it. Obviously, it's not a day where you go in today being down, 4%,
No,
so.
and that failed pivot that it tried last week at this point it gives the visual a very different read than you had last week. And that's where the difficult nature is. But if you see copper doji on the 20-day moving average, guys, and give you a good little technical support read, FCX holds 32.5. That's still a good trade on FCX.
Yeah, I agree. Yeah, that price action developing over the next couple of days is going to be very, very important for many of these different areas of the market. See how we head into the weekend for sure. Yeah. Quick peek of the dollar, then Bitcoin, then we're going to get into stocks. You got some corporate items, couple earnings today. Pretty light news day in that regard. Most of the market's just kind of down.
Earnings roundup will be quick.
Yeah. Dollar is popping back up here a little bit here. A little reversal development, still in a consolidation. Tyler, what you read on the chart?
So would I be correct in saying this is kind of a classic flight to safety thing here? You get a dollar bid on a down day in the market?
Yeah, if you want the market to recover, you don't want this chart to keep going up.
And ultimately, we have seen this before along the way, right? I mean, we've seen these bouts where the dollar gets strong, but yeah, I mean, look, it does look more constructive. So if you want to be a little more constructive on the dollar, sure, it's firming up a bit. I don't know if there's a trade here per se, but I think it is. Look, money's coming out of risk assets. Dollar's kind of a safety thing, so you're getting a bid today. And like Matt said, I mean, if the historical correlation holds, you don't want to see these keep going up, because dollar going down has been bullish for stocks.
Especially in an economic condition where it's so important for corporations to recover this year, especially energy companies, industrial companies that do so much business internationally. A strengthening dollar would be a massive headwind on their corporate profitability.
Yep.
Yeah, the bid on the dollar, by the way, we still see in the bond market, moving interest rates a little bit higher in those regards. So a little flight to safeties here is what we're seeing. I agree.
Well, on big down days in the marketplace, you will typically see that flight to safety. And you'll know if it's a flight to safety if you get a couple supporting analysis in the Swiss franc and the yen. So if it's a true flight to safety, those three currencies typically do okay. So if you look at /6J, you'll see it's a little bit different than a flight to safety.
Okay. Yeah.
That's an ugly chart.
Yeah, if it's, and again, that's very important, because you would think it might be a flight to safety given what's happened in the stock market in comparison to the dollar, right? I mean, you could take that as a flight to safety. It's not a true flight to safety economically if the yen's getting slaughtered.
But that's a good thing, right? I mean,
yeah, no, it means Asia does not support your thesis that the world is ending.
Right.
Yes.
Right. So you can still, so the whole economic growth, that whole argument
Yes.
is not being questioned based on today's currency movement.
Yes. Today the market's puking up what they ate yesterday.
Yep.
Sure are.
Yeah.
Oh,
It's
and
nothing
ate
more
this
than
morning.
that.
Yeah, and ate
Yes.
this morning. Quick look at Bitcoin if we can. Then we're going to get into stocks. Obviously, just kind of hesitating. It's held up pretty well against the market risk, I got to tell you. Down today, red candle, trying to hold the moving average. Tyler, any read on that chart?
Well, wake me up if we break 45K. No, it's just chopping. I mean, again, are you surprised it's going down a little bit today? No, it's a risk off day. So I think that's to be expected. But to your point, it's still above yesterday's low. I mean, it hasn't got slaughtered. So I think your bias is the same unless it breaks 45K. That's your support zone.
I mean, chopping anywhere around here in 50K. I mean, above the pivot holding. Yeah, I think you got to at least call that healthy. Obviously, it's down 5% here today.
5% might as well be a doji, Tim. Come on.
On Bitcoin, 5% is not a lot. Let's call it like it is. Yep. All right. Let's get into stock talk here. Let's move right into the next segment as we're working through the show the way we always do. Maddie, you got some earnings roundups, I believe. A couple of companies, I believe.
I do have a couple companies. I'm going to rapid fire earnings here, Tim. Not very many big names out there here today. Let's go with a company north of us out of Canada, Canadian Natural Resources, CNQ. Canadian Natural Resources, with the movement in energy here today, earlier today, CNQ had a really good momentum breakout. That's why I kind of coupled it in there. Market's giving it back a little bit on the intraday, but they reported a good beat, 8 cents versus the 2 cent expectation, 3.5 billion versus the 3.3 expectation. So a beat, and revenue did decrease through 29.7% year over year. But again, with the backdrop of some of these other earnings reporting energy, knowing kind of where the average price of oil was in the fourth quarter, average price of oil was in the low 40s in the fourth quarter last year. Average price of oil is going to be in the 50s for the first quarter in 2021. You got to like what you're seeing out of CNQ here today. Yes, the future does look a little brighter for those energy companies, especially if oil can maintain some degree of stability. And again, not in the short term, in the long term. But nothing else to see here on CNQ. Let's go to Snowflake, SNOW. Snowflake reports negative 70 cents a share versus the expectation of a negative 17 cents a share. That is just garbage, just truly garbage reporting numbers. I don't know if Snow tried to report that big of garbage, but they did a really good job of losing everybody's money. Good job, Snowflake. They also came in light on the revenue, in my opinion. This is a $70 billion company, guys. Revenue was like $190 million. Once again, let me say that again. This is a $70 billion company that lost 70 cents a share on $190 million revenue. Good luck, guys.
It's all about the future, Maddie. It's all about the future.
This company doesn't have one.
And your favorite bank, Deutsche Bank, upgraded them today, by the way.
Well, there's nothing more that Deutsche likes than companies that lose money. It's their favorite thing in the history of mankind. They're like, hey, do you lose money? We got your back. What is Deutsche doing?
Is that really all their revenue is?
Yeah.
Yes.
It's 70 million?
Yes. Yeah. And what do you think Deutsche is doing? How much money do you think Deutsche got paid by Snowflake today to upgrade?
Listen,
if you think Goldman's bad with bonds, just wait till you hear what Deutsche does with everything. They're a criminal enterprise. Why'd you have to get me triggered on Deutsche? Like you saw an opportunity and you just pounced. Like Matt's on fire. He hates this report so much. Let me just see what I can do if I dump some gasoline on it. Yeah, Deutsche Bank. Get out of here with Deutsche.
Remarkably, Snow's holding up here, by the way. A little, obviously a weird range candle, doji, but it's a head scratcher for me. It's a head scratcher for me.
Deutsche is a head scratcher. Thank you, sweetheart. Let's move on to OKTA. OKTA, and take a look at the Sox Index in general very quickly. The tech pain is real, guys. There's no doubt. Look at the Sox here today. I mean, just getting it absolutely on the chin. And OKTA and Marvel's not helping out. OKT came out 6 cents versus the negative 2 cent expectation. That was actually a pretty decent beat on EPS numbers. Revenue numbers came in fairly decent as well at 234 million versus expectation of 221. So a beat and a beat officially. 40% increase in year-over-year revenue growth was also a fairly decent number here for OKTA. There is timing of releases on earnings numbers. This was a bad day to release on a tech company, but they did lower guidance slightly. And so a beat on EPS, beat on revenue, slightly lowered guidance, a little bit of a lukewarm report here in this environment after a break of support yesterday. This was going to get sold. It's just a matter of how does it recover on that 200-day. And so if OKTA is one of those stocks you do track, you got to keep an eye on that weekly chart, and you got to keep an eye on how it navigates the 200-day moving average. The report was not a terrible report. The report was a fairly decent report. Lowered guidance is a concern, but the bigger concern here is just what's happening in technology and what's happening in the Sox in general. So keep an eye on that. Marvel, MRVL, same type of concept, same type of concern here. 200-day moving average bounce, real good company, fundamentally very company here in Marvel, but obviously they're going to get caught up in the selling with the semiconductors. They're going to be caught up in the technology sell-off as well. They come out and hit their number at 29 cents a share. That was the expectation, 29 cents. Revenue came in right there north of the expectation, but pretty much in line at 798 million versus the expectation at 794. Revenue did go up 11.2% year over year. And unlike OKTA, they did reaffirm their guidance. And so guidance was reaffirmed on Marvel. But again, the pain is real. Let's see how Marvel, let's see how OKTA, and let's see how those semiconductors handle some of these support bounces that are, semiconductor bounces coming up. Marvel and OKT are there today. Let's see how they handle those 200-day moving average bounces.
Yeah. Yeah. A couple of quick earnings roundup there. Obviously, there's a couple of other ones after the bell we'll be interested in, including Avgo. Broadcom's going to be reporting today.
Got a little bigger names here tonight. So definitely going to have a little bit more detailed earnings roundup tomorrow. But for today, that is it.
Yeah, absolutely. All right, a couple of corporate items. And then I think Tyler actually has some questions about Jay Powell, Matt, from some of the testimony he's been given. He wanted to ask you here at the end of the show. Let's flash through a couple of the news items I have, though, if we can. Exxonmobil, again, you guys talked about the strength in energy. Strength in Exxon has been apparent here for a while. We've been discussing it. We've looked at a lot of charts across the energy sector. Another comment about their dividend today, even CEO Darren Woods reiterated that they are committed to the dividend. He said, we're going to continue to return cash to shareholders through a very, very strong dividend Thursday in the interview he gave with CNBC. And this is more the same, guys. I mean, strong. If it gets back to what they've always been, this is who Exxon is. This is their personality. This is their character. They're a dividend-paying company. Another positive comment. Tyler, any read there on Exxon? Anything you want to add to that one?
Same as energy. I mean, same story as the energy play. So super strong today. I mean, you got to be happy if you own this thing, given what's going on elsewhere. So. Yep.
Absolutely. Disney, next one here, another indicator of what we've all known for a very long time, that these companies are going to be moving away from brick and mortar and moving towards online sales. They're closing 20% of their brick and mortar sales by the end of 21 and moving and prioritizing their e-commerce businesses instead. That's going to represent about 60 stores in North America. It's not surprising news, obviously. I mean, I think we all kind of identify what's happening. I think the last year accelerated trends that we're going to develop anyway. But as we had lockdowns and people were coming back in, I mean, Matt, these are stories we're going to continue to see, don't you think?
Yeah, this ain't the beginning. Are you kidding me? When did brick and mortar start closing? 2 decades ago. Mm-hmm. This is the continuation. Nobody should be surprised that coming out of the pandemic, more brick and mortar stores will go down.
Yep, absolutely.
That's 2 + 2 type stuff. That's 4.
2 + 2 is,
quite frankly, it's good. Disney should focus on digital.
Smart move. 100%.
Well, yes, Disney should focus on digital. No, it is the only move.
Mm-hmm. Yeah.
If you want to maintain your status at the high end of those charts, you got to focus on digital.
I agree. I
Yeah.
agree. GE got a price target upgrade. The industrial has actually had some of the better developing charts it's had in quite some time, holding up here near the highs today, completely overextended. But I believe it was Bank of America. Actually, let me double confirm that. Morgan Stanley raised price target 17 from 13. They like the recovery in GE. It's been one of those industrial names coming back. You guys know my long-term opinion on GE. I don't need to reiterate it here, but it's starting to look pretty good here. Ty, any interest in GE over the long term?
No.
Thank you, Tyler. You just became my favorite coach at Tackle Trading.
Can you ask me?
Matt, any interest in GE over the long term?
No.
Yeah. Thank you, Matt. All right. The world is sane. All right. Thank you very much. Amazon. Other quick ones. I actually was interested in this story just because I'm a consumer of this product. They're in negotiations with the NFL to carry more of their streaming games, trying to get some more exclusive of their content, Matt. We're going to see these firms and these different outlets that can produce video content go through this, and I would love to see Amazon bringing more of the NFL, getting it away from some of the other hands.
I would love the Amazon just to buy the NFL.
That would be great.
Bezos, don't stream the games, just buy the NFL.
Just do it.
You got the cash.
I would not have any problem with that. They're already buying all this other stuff.
Put it on Amazon Prime. That's all you got to do.
That's right. That's right. And then maybe one more here to FedEx real quick. They're putting $2 billion towards becoming carbon neutral by 2040. Another ESG move. We've been seeing these for quite some time.
They want that ESG money there, Tim.
That's right. They want that rating, bro.
They want that ESG rating, bro.
That's right. That's right. And by the way, the $2 billion is committed.
Hey, we're gonna call out these nonsensical ESG movements just to attach yourself to a theme in the market companies. We're gonna call this out.
Yeah. Yeah.
Are you going for the G on this one?
This one would be carbon neutral. This is the E. I think.
They're going for the E.
They're going for the E on this one. Yeah.
All right. So I'll give them the legitimate. They're going for the E. Typically, it's cheated on the S and the G. So we'll give them credit on the E.
Another company going for the ESG is General Motors. They're looking to build a second electric battery outlet in the U.S.
They want that Tesla. They want that Tesla E.
That's right.
Uh-huh.
That's right. I feel like these stories are going to happen like every day for the rest of the decade.
And I think it's going to be funny to me every day for the rest of the decade too.
That's right.
I have a question on the automobile stuff. So, all right. So if GM, and you correct me if I'm wrong, if the narrative is GM is now shifting towards electric vehicles, and that's going to improve their profits because they'll sell more vehicles,
it's not
or because they have better profit margin.
Wait a second, Tesla doesn't make money. GM's not going to make money on that. No, it's part of the joke actually, because it's not going to increase their profitability. It's not. It's just all about the future of battery production, and that's going to increase their profitability. But selling the cars won't.
Battery production meaning outside of putting it in a car, it's another revenue stream eventually.
Good. Yeah.
It just seems so. It's like, wait a second. We're selling cars. We're still selling cars.
Listen,
they're electric.
You're still in this. You think GM sells cars? Like, no, that's not what the ESG is about, bro. That's not about selling the cars. It's about just impacting the world to a better place.
It's all about the future, Tyler.
It's all about the future, bro.
It's hard to get excited about a stodgy old company that just makes money.
You know what I did love, though? You know what I did love? I loved the technician, Tyler, who always tells me that I focus way too much on the non-technical stuff, thinking about the non-technical stuff. I love that, Tyler.
Like, this doesn't make any sense.
I want to be in that boardroom when they're making the pitch, and so the guy's like, So how are we making money on this again? Like, we're still selling cars, right? We're going to sell more cars? No.
No, there's a 3-minute PowerPoint with some fantastic music that says it's about the future.
ESG.
What about the kids, Tyler?
Yeah,
I don't know. I just wonder, like, GM and Ford, it's like, why didn't you do this 10 years ago? Like, yeah, I mean, if that's all it took.
By the way, I joke, but I actually think that they're kind of pot committed. They have to make.
They don't have a choice.
They don't have a choice. The market will punish them if they don't. They just will. The market will punish them if they don't.
And the market is Larry Fink will punish you if you don't.
Yeah,
So
that's right. Pretty light news in that regard here today, guys.
it is funny though.
It's funny to me.
It's just funny.
Tyler, I think you had a couple questions you want to throw out there. I think probably from Matt about what Jerome.
Oh, you want to go from ESG to J Powell conversation?
I do, but I have one more thing on this ESG thing.
Yeah.
I'll get
so
there.
It's all about the future, meaning in the future we're going to make a whole bunch of money off of this idea, and it's like, how's the numbers work on that again? Like
Star Trek in the future is not about profitability; it's about humanity, brother.
What are these kids doing in like
getting talking about J Powell,
MBA, and corporate finance stuff?
I don't know how in the world do you ever justify whatever somebody thinks about the future. You just say Star Trek. Yeah, it's all amazing.
I got it. All right, J Powell.
We'll wait till the Klingons invade to start thinking about something negative.
While we talk about it, why don't we bring up the S&P 500 and discuss some of the commentary around Powell, because some of the volatility here today, obviously
what did he say?
I'm going to tell you what he said because it was earth-shattering. Okay.
Oh, did he? Oh, wait. Can I guess?
Yes.
Okay. If it was earth-shattering, he hinted towards inflation.
And what would cause him to say that? Like I don't know how he would come to that
conclusion. He said it, the other people that works for him are going to be very upset since he's told them not to say inflation for the last month.
So the CNBC headline is Fed Chairman Powell says economic reopening could cause inflation to pick up temporarily. And it's like, okay, so he read an economics textbook in his life, huh? And this is surprising how? I don't get it. I don't get it. It's like the emperor's the emperor has no clothes. It's like all these commodity prices are going up, but the market's like, hey, as long as Powell doesn't say anything, we're fine. And then he admits the obvious, and it's like, oh, we're screwed. It's just like, okay. I mean,
I'm assuming he's talking about inflation picking up due to the economy reopening up and the velocity upticking.
That could create some upward pressure on prices, was his quote. The other one was, we expect that as the economy reopens and hopefully picks up, we will see inflation move up through base effects.
Okay, so that's what we all learned on page 1 in Economics 101, right?
Yes, that's how it works, yes.
Okay, so what's the question?
The question is, how's come the market? It's just such a dumb excuse to sell off right now.
Okay. So, am I talking the Russell 2000 book here?
I don't know. I'm just spouting off on the nonsensical nature of pinning
it
this
makes not a lick of sense. Like it doesn't make a lick of sense. Again, I need to go read what Powell said, and I do think there's always context to the question too. So what was the question and what was his specific answer to that question? I'd like to see the detail there.
Yeah.
I'm assuming Powell is talking about this pool of money we have created, right? We have this pool of money and we call it the M2 rate. And in this massive pool of money, there's not real inflation there, because in this massive pool of money, it's just a fairy tale make-believe, something that we created that nobody has belief in yet.
Right.
But once that money starts getting distributed through our economic system, through whatever means of distribution, whether that is direct checks, whether that is the economy improving and people getting a job, however that is, all of a sudden the distribution of the money goes to the masses start utilizing the money, creates a higher velocity rate, and the inflationary pressure does pick up in that capacity. He's talking about that pool of money and how we will see a short-term impact in inflation, but yet it's not going to, and I'll guarantee what he also said in the back half of his answer, but it's not going to rise to the level of concern to some degree, right? And so what I would like to understand by J Powell today is, if you said that there is a concern about inflation, why in the world in the last month have you put out your cronies and given 38 speeches where they all say there's no inflation?
Right.
Like it's not, see, and this is what the market's puking up here today. It is not about the fact that J Powell said the word inflation here today. It is about the message that doesn't make sense that the Fed has been putting out there in the last month. that is the problem. It is a lack of transparency from the top of the market who don't want to admit what we all know is the truth, and that is inflation is coming faster than they anticipated, and they simply do not want to admit that. It is mixed messaging, and the market hates mixed messaging. Absolutely hates it. So what is it, Jay? Is it the fact that you see inflation in the short term, but it shouldn't rise to the level of concern? Or is it that you don't see any degree of inflation because what you have said in the last 6 months and everything your cronies have been saying in the last 30 days? I do think it's the mixed messaging part that does lead to concern. The market, if it's an inflationary versus a non-inflationary environment, we have data to support where this market should go and should play in that environment. What we don't know is how the market should play in an environment where the Fed does not have a consistent message.
Got it. So why, if I was the Fed chair, why would you not spin this as, yes, friends, the economy's recovering, hallelujah, things are going to go back to normal, prices might go up a little bit. That's the way it works. Like,
because
we should
you're a
this.
normal human being and you don't work for the central bank. Like the people that work for the central bank, they don't know how their one flaw, their very big flaw, is they simply do not understand why messaging is so important.
Yeah.
They don't understand the very nature of why humans behave the way they do.
Yeah.
And so this lack of messaging and lack of consistency in messaging causes concern, because we don't know about that rosy, amazing future now.
I have one other thing.
Because but very quickly, what you just said is the most important point. Yes, we will see a slight uptick in inflation because you have a job.
Yes. Like, what do you prefer? Would you prefer?
Would you rather
the
get the bailout?
Yes.
So I'm with you. How you frame that answer is the difference between the market going up 2% right now and the market puking up and everybody having a terrible weekend. Thanks, Jay.
Thanks, Jay.
I bet. Well, okay. So here's the second question. All right, because you mentioned this earlier. I don't know that many people listening understand what the implication is, but so the Fed,
especially when you're not clear about it.
Well, you referenced Operation Twist, and unless people have studied what that was back in the day.
Wait a second. Not everybody knows what Operation Twist is? It was a 1969 Vietnam military operation originally. That was stolen from a 1961 bond operation, which therefore got put back into the market in June of 2011. That's Operation Twist.
Now it makes sense.
Thank you.
The question
that is an example of why Mark goes to me for definitions.
Here's the question. Okay, so, and you correct me if I'm wrong.
Yeah.
The Fed could say short-term rates are at zero because we said so. They don't have the same amount of control on the long end. So longer-term interest rates have been rising. So they say, hey, we will start buying longer-term bonds to put downward pressure on yields.
It's a covered call, Tyler.
No, I know what it is. My question is, why in the world are we at the point where the 10-year goes to 1.5 and they're like, hey, take care of them long-term rates, guys?
Because
1.5 is really pushing it.
Tyler, you're a good Mormon boy. You don't understand a lot about drug addicts. Let me teach you a little bit about a drug addict. So you start with a little small sum, right?
Mm-hmm.
But your body gets used to it. And so you need more and more and more and more. The stock market got addicted to drugs. And that drug was free money that the Fed was putting out there through quantitative easing, zero interest rate policies. Basically, they were paying corporations to take money at points throughout this cycle.
Right.
And so even a slight uptick there in reference to what they have been doing is concerning. Now, to people that grew up in 2005, they're like, oh man, 1.5% interest, that's nothing. Right. I think it's just all relative to kind of the condition that we're accustomed to in this cycle. Yeah. And in this cycle, we are accustomed to nothing.
Well, but yeah, duly noted. I'll just point out, though, this cycle includes 2017, 2018, 2019.
100%. This cycle goes from 09 till today.
Yes. And we were at 3. plus on the 10-year 3 years ago, and yet it didn't kill the market, I'll point out.
Well, yes, but you were also 3 years ago coming out of a tax situation where you just had tax cuts and you had an economy going up 2.5%. One quarter was 4%. Right now we're looking at the worst economic condition of our lifetimes. At least not currently coming out of it, right?
I got you. Yeah.
It's all relative. But don't get me wrong, Tyler. I'm 100% with you. I think it's silly. I think it's silly that we are overreacting to where the bond market is right now.
Well, and the thing is it's like, I don't know. And again, I'm not an expert on this, but it just, maybe I'm too simple-minded, but it just seems like if not now, then when? I mean, if you're going to just continue, we're going to have this discussion every couple of years if we get up to the 1.5 on the 10-year. I mean, forget normalization. We're just stuck with this for the rest of my lifetime. It just seems like if you don't allow things to just normalize, it just feels like you're just going to be in the same cycle again and again and again and again.
I'm going to say this, and this is, I'm going to say that nobody ever knows what the future holds. Okay. I don't believe the bond market is a viable market for you in your lifetime. I don't think it ever will be again for you. I don't think you'll ever offset inflation in the bond market again.
Mm-hmm.
I think if you look at the trajectory of the interest rate cycle from the 1980s till today,
mm-hmm.
and you can do the same thing in the bond market because they're closely tied to one another. You were getting averages of 11% in the bond market in the 80s, close to 9.5% in the 90s, close to 6.5% in the 2000s, and you're getting close to about 4% on average in the bond market. The interest rate cycle was zero over the last 10 years, right? Maybe 0.25, but about 4% in the bond market over the last 10 years. You're not going to beat that trajectory, not until the reserve system changes.
Mm-hmm.
And so, and I was talking about Mark and Tim about this just the other day after the podcast, because we had a very lengthy conversation about this. And I said to them after this very lengthy conversation, I said, guys, listen, I get it. We talk about normalization. What I don't think people understand is what that would take to normalize. And truly to normalize what we have done, you need to reset the fiat reserve system. And I don't think people truly want to go through what that pain would look like. So I think we're going to continually try to kick this can down the road until the fiat system blows up on us. And I don't think that's going to happen in our lifetimes.
Mm-hmm.
So just permanently low interest rates here on out. And
I think we are living through a permanently low interest rate cycle. Yes.
Yeah. I got it.
But maybe not permanently low. Maybe 10 years from now, we look at a 2.5% interest rate as high, right?
Sure.
But in comparison to history, yes, it would be like the low would be 0 to -1 and the high would be 1.5 to 2.5. Whereas in the 2000s, that was 2% and 5.5%. In the 1990s, that was 2.5% and 6.5% at the Fed level. In the 1980s, that was 6% and 18% at the Fed level. And so those ranges in the interest rate just simply over time has contracted. And so I don't see this situation as a current market cycle problem. I see this situation as a problem that we don't reset our debt cycle any longer. And that goes back to the 90s. And so, yeah, I think we're stuck here. And I think the Fed knows we're stuck here.
Got it. Well, and ultimately in the long run, that's good for the stock market because you get jacked in bonds, right? I mean, that's
Tyler, the premise is a very bullish premise for stocks.
Yeah.
Long term.
Right. I mean, it's stagnation for people that earn to live, right? It's stagnation. You never grow in that environment. But for the investor class, like, okay, if you go Robert Kiyosaki's ESBI, right? ESBI to the E and the S, yeah, that's very, very damaging. Very, very damaging. But to the B and the I quadrant, it's the expansion of the entire inequity that we've seen since the 1980s, and that expands.
Because the E and the I, or the E and the S, right?
You'll get wage increases to offset the inflationary, so they'll be stagnant.
But they're but they're not investing. They're not investors at all.
No, they're not investors.
Right? So they're just
they're not investors.
Yeah.
No, and I'm not even talking about the dude with the job that has a 401k because that's a benefit to them.
Right.
I'm talking about true E and S, true B and I, those types of how
got
they
you.
earn money in general. Yeah.
I agree. Yeah, that makes sense.
One last question I got from the chat. I want to throw at you guys. I think it's a relevant and timely question right here. Craig Delk says, should we start talking about how to protect our portfolios from here? I think it's on the mind of people out there, guys.
You know what? If you feel the need to protect the portfolio, I think you're overweight in technology and discretionary, and you probably should look at rotation instead of protection at this point. And so I do think the protection concept is probably a little premature because this is not supported by broad market mechanics. It's really segmented in certain sectors, and that's discretionary. That's, obviously, like, for example, utilities has been as bad as technology for like 6 months. Nobody's been saying that. It's technology. It's your overweight in technology. And how many times, Mark, even Mark on the halftime report, when he comes in, Mark lives in that area of the market. He's like, you got to rotate. You got to, and how many times have I said in the halftime report, hey guys, if you're overweight in tech, you got to start sprinkling in some finance, some basic materials, some industrial, some energy stocks, right? So I do think if you're having the conversation, oh my goodness, this is getting a little nasty out there, it's probably not just because you're looking at the market breaking a short-term support level. It's probably because you're looking at your portfolio and saying, why am I so red? And that's a portfolio balance conversation before it's an insurance conversation, in my opinion.
That's right. I mean, what is the S&P is how far off the high, Tyler, percentage wise?
You're probably 4 or 5. Let me see.
5.
So if a 5% move in the broad markets is creating a 20% loss in your account,
it's a weight problem.
It's a weighting, it's a leverage problem. There's other things happening there that you need to probably assess, I believe. And that's where portfolio design, understanding those concepts is very important. And I would do a leverage check. I would look at the way that I'm balanced, all those.
If this was widely broad based, okay, I would have a different answer if it was broad based. And so if the market is literally, if we were looking at the spiders right now violating the 50-day moving average like it is on the back of volatility increasing, on the backs of trends shifting and pattern shifting and momentum shifting, I would have a different response. Energy, finance, basic materials, industrial, all doing very, very well. Cyclical movement still supported based on theme. Economy still reopening up. I think we're premature there. I do. Now, again, if you are having that, you need to look at the weight in your portfolio. And at this point, you're kind of getting to the, man, have you missed this? And are you late on selling here? Right? I mean, tech's down 10. You're in correction territory, guys.
I have a lot to say on this here. So I'll put in a plug. If you come to the Cash Flow Club tonight, I'm on Cash Flow Club this evening. I'll do a deep dive on this question.
Please do, Tyler.
To buy protection?
Please do, because I think that is such a wonderful and important question. And I do think if we do a deep dive on that conversation, because I do think it's a rotation answer right now, not an insurance answer. But those rotation can get into insurance really quickly, though.
And we're context so matters here, right? It's like, well, are we talking about a 401k that you don't need the money for 30 years? I mean,
then the answer is absolutely no.
This is going to happen 45 times over the next 30 years.
You don't want to pay 10% to protect against 4%, guys.
Yes. And so versus the person that's like, no, it's a short-term, portfolio. So it completely depends on the situation. So I'll dig into it tonight in the Cash Flow Club for those that can join me.
Well, and there's some detail in there that needs to be, understood on any individual, but obviously we're going to tackle it from a broad base. I mean, for investments and trades, those are different conversations,
guys,
right?
The number one indication that has always occurred before you see major market sell-offs, and I'm talking the ones historically, right? I'm not talking about the 5% dip that happened in a random month in 2014, right? I'm talking about the ones we remember as a consumer base, the 08 market, the 2000 market, those major market cycles. What always happened before those major market cycles was an interest rate cycle of normalizing interest rates. We haven't even started thinking about that yet. And that's not me saying that, guys. That's our buddy Jay Powell saying that a month ago.
Yeah.
Yep.
Yeah. Definitely. And Tyler, I'm glad that you're willing to take that on. And I'm glad that you're teaching that tonight. So
No,
very
it's such
relevant,
an important concept, and that's a great question.
timely topic, very important. Hopefully we can help anybody out there
And
that
Tim,
does have those questions.
100% the question you should be asking yourself.
Mhm.
100%. Now the answer might not be, maybe not yet, but I love the fact that Craig's thinking about that question.
Yeah.
But particularly before the market's down 25%.
Oh, I know. I love the question. I love the question.
Yeah. Dive into it, Tyler. We'll make sure that we get that out there to everybody as well. All right, guys. Cody, come on in here for 1 second. We got who won?
I didn't see Trade Masters last night.
Cody.
Like, Cody, I did not consume last night. Give me an update.
Can I make a prediction?
Tells me you won.
Would he have showed up? Would he have showed up today?
No,
if
he
didn't win?
wouldn't
Let's
have.
be honest.
No way. Cody would not have showed up if he wasn't in braggadocious mode.
I'm actually not, because I did not win.
Oh, look at Cody shake.
The reason.
What happened?
I mean, Mark said he loved all my picks, but Greg got the win because he had bearish picks. And look at the market today. Mark was like, everyone's overweight right now.
Mark is a little Chicken Little these days, so
and he was like, I like those low bases and those bearish plays. So he gave it to Greg because Greg has some bearish picks.
I'm buying Mark dinner the first time I'm on Trade Masters, and it's going to get delivered to him 5 minutes before the show, like at 4:55 his time. That's all that's happening.
Send him some sushi.
And then you know what I'm going to do? I'm going to bring the worst picks in the history of mankind.
he'll be eating throughout the show.
He'll be like, dude, this McRib you got me is so delicious. I'm like, yeah, that McRib is better than the pick I just gave you.
Yeah. Yeah. Cody, well, you had the title. I believe this is now twice that you've won this title. You'll have another shot.
No, I didn't win today though. Yeah.
But you won.
He's 2 out of 3.
In the past,
he's 2 out of 3. Yeah, he's 2 out of 3. Good little star for old Cody there. I like it. Cody, give us one of your picks. Give us one of your picks you were looking at yesterday.
Mur, M-U-R.
Nothing to dislike about that high base momentum breakout.
And take off today.
And it did today. Yep. So I had 2 oil picks. This one and what's the other one? CVE, which isn't doing as great right now, but it's still right there.
Still like it. Relatively strong. Cheap little stock play. You had to hunt for that cheap little stock.
I did have to hunt.
Man,
you
had to get dressed up and everything.
I went some plays that everyone can do a little differently.
I like it.
All right, let's see what else I had. I had an airline on there, but it's not doing great right now.
Cody, the next time you're on there, I want you to pitch a Forex trade to him.
Oh God!
Just see what he does.
Oh yeah.
And then when he says I don't trade Forex, say then why do you trade Bitcoin?
Oh, I see what you're doing.
I'm doing a little mentoring. That's it. I'm just doing a little mentoring with Cody. That's all.
One that I didn't use, but I had and I should have used was Exxon, and Exxon's doing fantastic today. I don't know if you have already looked at it or not in the show.
Yeah, we took a peek at Exxon. Exxon looks fantastic.
Listen, the chat, Linda has got your back, Cody. Linda says Cody did a great job last night. So there might have been some mixed read on who won the title, but nobody else is the judge but Coach Mark. And Mark awarded Greg the title. He's now the champion. Someone's going to have to knock him off. Old Money Holmes, brings home the belt. I'll have to go back and watch the recording. So he had a couple of bears. You had some energy plays. Sounds like a fun show.
Okay.
Bears did win the day.
The scale. Well, the Bears are winning the day here on the broad markets, by the way.
I didn't get a chance to watch Trade Masters, but I typically really enjoy sitting down and just being a consumer of Trade Masters, honestly. I really enjoy that show.
It's a fun one to watch.
Yeah.
Let's get final thoughts here. Tyler, you first, then Matt. Tyler, final thoughts.
What do we got? Two more hours in a day. Small caps are down 3% right now. They're not messing around. So, look, we broke the 50-day. I'd be shocked if we close above the 50-day now. So, trend, the short-term trend is down. Everything we said earlier in terms of trading, directional trades being harder below the 50-day, this is downtrend correction territory. So
Yeah.
We're in the deep end of the pool right now when it comes to trying to do short-term trades.
And when you do see these violations of support, it just takes some time.
Yeah.
It does. It just takes some time for the broad market to set up, right?
Mm-hmm.
But I still maintain this is a stock picker's market.
Mm-hmm. Mm-hmm.
And you still have amazingly good bullish uptrends in certain areas of that market.
I agree with that.
Well, and we will have sharp rallies. Remember that the biggest rallies come in downtrends. So just look at the last 2 green bars. They were doozies. So when this snaps back, you will see some pretty good strength.
Mm-hmm. Yeah, got some key earnings tonight. Avgo, Broadcom as well, and Costco as well, I should say. And then tomorrow we do have the monthly jobs report. But really, markets are going to be running on technicals. The closer is going to be interesting. But in general, Tyler, looking forward to your cash flow club tonight. Maddie, final thoughts for you? Anything?
It's going to be running on psychology, not technicals. That's what happens when support gets violated, right? I mean, it's the uncertainty. So, and because it's the uncertainty, you can prepare for where support could form, and you need to. Absolutely, you need to update. Okay, where's these support levels? Where could they form? But just as a reminder, guys, support only gets formed by the marketplace, and that always starts on intraday analysis. And so in these environments, I like to tighten up positions, tighten up time frames. Do your job. You're a trader. Do your job, but tighten everything up. Get systematic. Mark said something the other day. He said, over the last couple months, I've gotten a little outside my systems, right? I maybe got a little loose on trading my systems. Maybe, if I typically sold a 3 delta, maybe I've been selling a 9 delta. Maybe I've been getting a little greedy here. This was a reminder to get back to being systematic. And in these environments, you need to be systematic.
Yeah, I agree 100%. Well said. All right, guys, that's it for our show here today. If you're out there and you've not yet done it, subscribe, click the bell. We go live every day. The markets are live, analyzing, the news, the charts, everything that's happening out there. We'll be back tomorrow with Coach Breakout Frank, as always. Looking forward to that. Until then, have a wonderful day. And do not miss Coach Tyler's Cash Flow Club tonight, 8:30 Eastern. I'll drop a link to the event.
Man, I love that question. I love our community. That's such a good question.
Bring it, guys. Bring the questions. Come in and enjoy that show. And Tyler,
Cody,
you bring the heat.
A rapid fire question, real quick to end it. Pound above 140, yay or nay?
Pound above 140, yes.
Okay.
There you go.
I'm done.
There you go. Maybe you should have brought a Forex trade there, Cody.
Only when Mark's here.
That's right.
If I would have brought a Forex trade, I would have gone JPY US dollar. Look at that today.
Yeah, the yen got
dollar yen
beat up.
Well, you didn't. All right, guys, we are done. We will see everybody.